The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your lovable, your humble and lovable host who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we have the S&P's off 67, the Dow off 645, the NASDAQ off 200. And I think probably the most interesting thing today is the first day that we don't have more than 9.5 billion shares to start the show. Just 7.5 billion on this pullback today. I suspect we're probably going to have a few more days of pullback. Fund buying pretty much starts on Wednesday. From what I can find out, a lot of that money came in on the 1st. Basically it takes a couple weeks to get it there. So this will probably be the last big fund buying section where employers were putting money in and coming back. But generally, that's been about $30 billion a month, nothing close to the $2 trillion that they're tossing around in Washington, D.C. But should be at least a drop in the bucket in things being a little bit firmer next week. I dislike that we're kind of moving back up off the lows with lighter volume today, but I think we're going to need a little back and fill for at least a couple more days, even though the market does look like it's holding up fairly nicely into the weekend. Probably the easy money is over. That is the huge 1,000-point swings up and down in a day in the Dow and 500 points in the NASDAQ and a couple hundred points in the S&Ps. But we'll just have to learn to get along with the market that doesn't just shoot a fire hose of data at you where you can be really right or really wrong in a day. But we shall see. And, of course, maybe a little less headline driven going forward. We're not waiting for any more packages to be passed, at least at the moment. And it's all about implementation from now on. But we shall see how that goes forward. For the things that I were looking at, Apple above 250 continues to be kind of a good sign. It's at 255.55. Looks like it could hang out above 250 for the end of the day. Other ones you want to look at are Microsoft. In fact, Apple, of course, being more of a hardware company, has a little different sign. But I'm going to talk with Tom O'Brien today at 3:30. We'll talk about what I think is one of the biggest stories that is fairly unreported this week in Silicon Valley. I kind of, probably because it crept up on people so slowly over the last few years, most people don't even know what it's called or have heard about it. But we'll talk about it. I was going to talk about it a couple of weeks ago when this started, and for whatever reason, I couldn't forget. We didn't get to it, or I forgot about it. But the story's only gained in size since then. So that's what they call in the big broadcasting world a teaser for 3:30 with Tom O'Brien. Other things going on, that's kind of it. We're just bouncing around. As I said, I would love to see just kind of a nice slow pullback over a few days, some kind of pullback to maybe some Fibonacci levels. A lot of the stocks have hit resistance levels that we talked about, especially the confluence levels. When they pull back off that, generally they take a couple of runs at those levels, and if they're going to break through them, it's either the second or third time if we're going to go higher on that. So buy the pullbacks, sell the confluence levels, or sit on your hands and hope that they go through the confluence levels, he said. So that would be it. So we'll see how it all works out. What else did we have? I think that's kind of it. I did want to talk about, did I get to it? No, I didn't. I got to get it up. I was busy doing a lot of stuff, so we'll do a little history when we come back. Let's go ahead and pop up a chart. As I said, I want to look at some of these big stocks early on in the market. So let's go ahead and look at Microsoft, MSFT. They continue to do everything correctly. The thing is, does it really matter in a market? Light volume compared to yesterday, 65 million shares yesterday. You got about 31 million shares so far today. This kind of hanging out in the middle of the range. Of course, this is going into the 13th where you had 92 million shares. So is it a horrible looking chart? No, it's still one of the strongest ones in the NASDAQ, in the NASDAQ and the NYSE, S&P and NASDAQ, excuse me. But light volume just the same. We're looking fairly good at staying above some of these long-term trend lines in Microsoft. As we said before, Apple doing fairly well at staying over 250. That kind of seems to be a line in the sand for it. A little doji out here. So the question is this a halfway move on the move up, or is this doji saying that we're going to pull back to 225? Again, probably on Monday, but I can imagine that they'd support 250 at corporate headquarters for a while. NFLX, of course, holding out okay, better than the market, but again, up on lighter volume, 4.7 million shares so far compared to the 7.2 million shares yesterday. And of course, that's the reversal day on the 24th, where you went up a little higher and came down on 11.6 million shares. So the 4.7 million shares right now, you're starting to see that kind of resistance level where a lot of people don't want to poke their heads out too far in front of this rally, but we'll see. What else did I want to look at? Somebody wanted to look at the XME. Let's take a look at that since I've got a minute before it. We did have some numbers out from the Baker Hughes numbers on energy. Now, I'll talk about that in the next segment. But you just don't have a lot here. You've got a trading range from 1424 to 1744, but I think it's going to take a few more things opening up before we see a low. The nice thing is you are a little lower with very light volume today in the metals and mining sector, just 850,000 shares. You had 3.7 million shares on the 24th, 2.8 million shares on the 17th. So light volume pullbacks all around, but may take a couple more days out here to beat out some at least temperate lows before fun buying next week. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we are back. And you know what we want to do now is do a little history. As we said, got to get that out of the way and then do the rest of the show.
It's all just a little bit of history repeating.
And what do we have? Okay, 1964, the strongest earthquake in American history, measured 9.2 on the Richter scale, slams southern Alaska, creating a deadly tsunami. Some 131 people were killed and thousands injured. The tidal wave, which measured over 100 feet at points, devastated towns along the Gulf of Alaska, caused carnage in British Columbia, Canada, Hawaii, and the west coast of the United States, where 15 people died. And it was big in Hawaii. Now, I was too young to remember it, but I remember people talking about it, when I started getting old enough to remember growing up there. And I remember that I think it killed a lot more people than 15 in Hawaii. But, yeah, back in 1964, a huge tsunami. But, yeah, there's some great pictures of what it did in Alaska that year and how many trees it ripped out of Alaska and eventually all ended up on the Hawaiian beaches. But kind of, I, at 4 years old, what do you remember? But I remember probably being 8 and they'd started putting out tsunami warnings. And, kind of the old duck and cover thing in the schools. You had to figure out how to get to high ground in case a tsunami came by. But that was it. Yeah. Okay. Got a lot of stuff to discuss with Tom O'Brien at 3:30 today. So stay tuned for that. No one really tunes anymore, do they? They just type in their browser and that is it. We had some Baker Hughes numbers on the oil wells. And man, is there some devastation in that business. Whoever's left is probably going to be a fairly good buy over time. Question is, where would you look at it? And I'll look at the OIH. To me, that's somewhere around 375, 380. on light volume would be interesting. You do have very light volume on the pullback today. I don't know if it gets there, but chart-wise, you're kind of looking, what was that close? Yeah, 382 back on the 20th, but you're kind of looking that area to fill the gap, at least part ways. But, the question is, can you read the mind of the Saudis and the Russians? Do they shake hands and sing Kumbaya? And, they at least move the price back up to 30, 40 bucks. Don't know. Of course, if you missed it yesterday, I think maybe yesterday or the day before, they indicted the king, not the king, what would you call him? The head, the president? He's a dictator, so I don't know what to call him, in Venezuela for narco-terrorism and shipping cocaine and trying to flood the streets of the United States with cocaine. I suspect that is a way of kind of tightening the screws on that dude. But as long as he continues to run the country, I don't think a lot more oil is coming out of Venezuela than we've seen already. And of course, they're, I think, right along with the Saudis, the cheapest producers in the world. But not a lot of juice coming from those guys just lately. But you know what? The best cure for a low price is a low price. And yeah, probably the average cost of production is about 45 bucks. If the Saudis weren't pushing oil right now at whatever it is, 20, you could see a fairly quick bounce. The question is, how long does that take to resolve? I don't know if the Russians can take it very much longer. I think they're pretty much broke already. But there are a couple pictures. In fact, somewhere in a storage bin far, far away, my mom has 8mm film of the beaches from that time. And I remember seeing it, occasionally growing up. But yeah, a lot of wood on the beaches of Hawaii. But that's one of the reasons why I remember it. You always remember, do you really remember what you remembered at 4 or 8 years old, or is it just people telling you the stories that you remember? It's tough enough. It's hard to know what I remembered from yesterday, much less today. Other things going on in the market we wanted to look through. Ultra Salon. Someone was talking to me about buying this yesterday. I said, this is exactly where I would be selling it. This had two things that made me say this is where you're probably selling it, not buying it. First of all, of course, is that this was in this big gap down with 2 million shares, and you basically got into it yesterday with 2 million shares. It wasn't as bad as you would think, and this may be one to buy back. But the real reason I really disliked trying to buy here was this confluence level. Again, if you haven't read Tom O'Brien's book on the art of timing the trade, the part I would look in there is the confluence levels. And they just seem to be very, very close. Now, this got to 201? Yeah, 201, but it didn't hold it yesterday. And, of course, it's back under that level. Sometimes you'll get to it, but you don't want it to get to it, roll back over a little bit, and then pop back under it. That's a pretty good indication. This one in the blue is not the one I'm looking at. You generally want to look at the one that's thin and the longest of the bunch. And that ended up being, 193 to 189? And, of course, what are we at now? 177.90. Not a bad long term, but again, this is a company that depends on retail traffic. I've seen the lines of women attacking this store on the weekends and nights, and it certainly is one you want to keep an eye on as soon as everything opens back up, because much like ships, it's not the hull that costs a lot, but it's the rigging. And these guys, Ultra Salon, they sell the rigging for the women. But that would be it. Okay. You can reach me at 877-927-6648. And, of course, you can always put a message in the den. And email me at path@tfnn.com. Okay. Thoughts on J.P. Morgan? Well, he had a really big nose. And apparently this is Pete in the bunker with toilet paper. And I just think that those people that were all the preppers for the last 20 years that we were laughing at, they're probably in there sitting on a mountain of toilet paper and laughing at us today. Took a long time. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the first question that we have here, new question, is the semiconductors. And again, like I said, what you want to be looking at are these confluence levels. I would have liked for this to be a little tighter on the SMHs, but you've got 117.63 to 122.52. You got to 122 yesterday, and you're kind of pulling back down today. So again, when you set these up, it depends on what you're doing. If you got a long-term trade, then maybe you don't want to pay attention to these. But if you're just trying to buy something off the bottom and waiting for the first top out, this is where you're going to probably start seeing some level of consolidation. If this was a little tighter, I would just say that would be it. But generally, when they're kind of wider, like this one, than the real tight ones we showed you before, they kind of mush around in here and pull back a little bit, and then they kind of work through it a little bit. You've got some nice gaps above. On the volume side of it, you had 4.6 million shares yesterday. That's compared to the 5.8 million shares on the 13th, and the gap down the day before it on 6.8. So I think, like I said earlier in the show, I think the easiest money is over in these markets. Now it's going to be the slog and a lot of sitting on your hands and a lot of back and fill. But I think we're probably at least going to push back up to that 122 either mid to late next week as we see the end of what probably is going to be fund money for a while in a lot of these. I don't know. Since that cash is already in, I assume they're going to shove it in the market. But after that, the question is, out of that 30 billion that normally came in the market for fund buying, is it 15 billion now? Is it 20 billion? Is it 10 billion? I think we're probably not going to know until we get a couple of months under our belt. But in any case, I think it should probably diminish a little bit for a while until everybody gets back to work. And I'm optimistically or rationally optimistic about that happening. I'm not a Debbie Downer saying the end of the world is nigh. No, no, no. I just want a little less of those negative waves.
Knock it off with them negative waves. Why don't you dig how beautiful it is out here? Why don't you say something righteous and hopeful for a change? Always with the negative waves, Moriarty. Always with the negative waves.
Well, we're not going to have any of those negative waves on this show. We're thinking upwards and onward to the best of our ability. And, of course, markets go higher and lower. But should they really affect how you feel for the day? You can make money both ways. I'm going to be happy. I choose to be happy and go forward. Okay, what else do we have? We looked at Ultra Salon. We talked about QGen yesterday. I wanted to follow up on that. Had some questions. This company is got a test. And the biggest problem I have is generally these companies in testing don't seem to make a lot of high margin. It's kind of like the difference between a software company that makes, software and it's like printing money, opposed to the company that makes the software that everybody just sort of buys, but it's like $10 and it never really matters that much. The testing companies tend to be like that. And then, of course, they tend to go in and out of business a great deal, not only in the testing, but the, what would you call it? It's not just the testing, but the doing the, not surveys, but what do they call when they're actually testing a new drug? I'll think of it in a minute. Not test and measurement, but there's a company called Quintiles that they're always advertising for someone to come in and spend 30 days in their facility, and they give you the drugs that they're testing all day, and it for 30 days, and see what happens to you. Basically, a human guinea pig. But that Quintiles company, I remember, has at least been out of business once, if not twice, because, of course, eventually they get sued by all the people that are throwing these drugs on that haven't been, really well tested. You are literally a guinea pig, but, some people in trouble, they'll pay you $3 or $4 grand a month. And I always thought, well, if I was down on my luck, would I do that? I always wondered. But these testing companies tend to never make the kind of money that the big drug companies make. But, it sounded like a very good company. But again, you go on CNBC, you get your flash, which is what it was yesterday while he was on TV, $42.41. Then you kind of come back to reality, and then you have to look and see what's going on full time. Trying trying to remember, what do they call it? Not studies. I think that's what drug studies, isn't that? Clinical trials. Thank you. That was what I was searching for. What else do we have here that people are bringing up? Okay. We talked about, did I finish on JP Morgan? JPM? JPM had at least a handful of its clients blow up. So I don't know if things get that better for them in the near future, especially if somebody bought and they're just going to sit on their hands. If we get a little more volatility, I think they have problems, not systemic problems, but problems probably where this thing is going to go sideways for a while. No one really knows yet how bad these guys got hit, because you got to know some of the people that they dealt with blew up. And they may wallpaper over, they might hire as many little kids to put fingers in the dike as they can from, not Norway, where is that? I'll think of it. But you've got to think that there are people that owe them money, and they ain't going to get it because of the way the market moved. Maybe they were fast enough, but my guess is that some of those companies, especially people, probably went in large at the lows, what they thought the lows was on oil, and the Saudis unloaded on them, and that probably was enough to wipe out a lot of money in JP Morgan and Goldman Sachs and the rest. I think those guys, it's going to be one of the things where it is a cockroach. You're going to see one or two, and they're just kind of dribble them out over time. But I think that was probably enough in there to do some real damage, short and maybe even medium term in some of these bigger broker dealers, much less all the issues with bonds and everything else. I mean, there got to be people that move it. The market moves so fast that these guys are going to have to eat that money over time. And I think there's you went from 78.09, the March 23rd low, up to 98.57. But somebody had that counter risk, and my guess is it's going to be Goldman Sachs and Morgan, and they're going to just slowly bring it back in. Probably not enough to kill them, but I think a lot of people are going to worry about it for a while, and probably not the number one choice going forward for these guys. Probably stocks with a lot less risk and a lot more demand. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And Amy from Nevada, hopefully you call back. The little thing didn't beep, so I didn't see that you were there. I'll give you a few minutes to call right back. And sorry for the wait. What else do we have? Oh, a question coming in about it. Okay. We've got a couple of them here. The question was, what's quintiles? Well, they ended up being merging out with another company. I think it was IMS Services or something. They all do the same thing. But if it is now IQVIA Holdings, and that is it. Okay. Well, I heard to click that time. So maybe something else is going on. Oh, that picture is in over your upper left. I don't have any pictures, so I don't know what you're talking about. I got no picture, so I don't know what's going on. Okay. Anyway, this IQVIA Holdings is both of those companies that does the medical testing, if you ever wanted to know about it. But again, look at how a lot of these charts got right back up into the confluence level. This one did the same thing and it's pulling back down. So generally, if you buy something off the lows and you've got some kind of pattern like this, you want to be looking. This got to 116.37. The confluence level on this got 116.02. Okay. What else do we have? Okay. Oh, what is it? SCO. Sorry, SCO. Take a quick look. Southern. There we go. Ultra short Bloomberg crude oil. You got kind of a little move here. I mean, the problem is that the oil, it's all about the headline, right? If you're short the thing and the Saudis make a deal, you get blown out. I don't think it's going any lower. So the only way you could play any of these, I think, is have an option. At least have some level of loss baked in before you start. I don't think it's going any lower, though. So the question is, does it pop higher? Crude. But certainly, I would be very nervous to be short because I don't think it's going any lower. But you get the wrong headline and it does pop higher. Yeah, you want some defined risk with some kind of option in this thing. I don't know. The big problem now is with the VIX as high as it is, your options decay faster than ice cream melts on Georgia asphalt in the middle of the summer. And that's why I keep winning that Mixed Metaphor and Tortured Analogies Award every year at the TFNN Christmas party. Okay, paychecks. Where is the entrance? It's a tough trade in oil. That's all I got to say. If you're lucky, you catch it, and you're watching the headlines at the time. Paychecks. Okay, where is the entry? Okay, you had a low with 5.5 million shares. You got tested almost with March 23rd. See if there's anything else out here. Well, I mean, if you're lucky, you had a nice volume day up on the 25th. If you're lucky, you'd get back down to 59.16, and that's probably the first level. And you'd have to probably take risk down to 57.01. So you have about $2 if you can get it at 59. Probably stop out if it goes below 57. You could go back and retest those two previous lows. And that is really the problem. If, as we talked with Tim Ward yesterday, what is your time horizon on these? And if it's, 2 weeks, then that's a whole lot different than maybe 2 months, because no one really knows the future. I'm fairly rationally optimistic that as the weather warms, we're going to see a whole lot less cases. We're going to get back to work, and we're going to probably solve out a lot of these issues before next fall. And I think, things can get back to normal-ish, but it'd probably take a year to get back to total normal. So that's it. Okay. Got a few other things here. Got a few minutes left to go. Okay. Got that. Okay. Question about IBM. Is anything changing my mind? I when I get these emails, I always assume that someone's stuck in this somewhere. I mean, you got to bounce. But again, if you want to sell, you either want to sell at the gaps when these things came down on the bounce, or at the confluence level. And, you pretty much have everything you've got. The confluence level goes to 118.70 from 115, well, let's call it 116. So you got about $2 right there. You're back into this gap down from the 12th. That was down on 12.5 million shares. You were up with it into it yesterday with 7.2. I'm just thinking, if you bought this doji down here on March 23rd at 90.56 and you got 113 out of it, I think if it's a trade, you're getting a little piggy. And if it is a long-term investment, I think you're probably a year ahead before these guys even start to see the light of day on all the quantum computing stuff. Question about Twitter, TWTR. Nice bounce. And again, why I am kind of thinking we're going to need some back and fill probably for a couple of days, today being the first day of it. We also had a huge put-call ratio on Monday. Normally you get 3 days out of those, and then you start seeing some back and fill or a pullback. You had your confluence range in Twitter going from 2644. Yeah, I mean, it's pretty wide, so I don't spend a lot of time on it. But you did have some huge gap down on the 16th. On this one was 28 million shares. You got into it yesterday with 20.4. Not bad, but probably 23.73 would be a pullback and still not damage that, and maybe an ABC on the way back up. But I could see a little bit of pullback on Monday and Tuesday. If you're long already, you probably don't want to hear that. If you're not long, put in an alarm out there, 23.73. That's 50% pullback. Not real tough on Twitter. And again, I think you're always one day away from the headline on Twitter that they're going to accept advertising for the political race this fall. And that could change everything in their profitability. With accepting that and doing a few other things that the activist board is doing, I think eventually this is $60 stock. The problem is, when does it start and how long does this go? But we shall see. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Gonna wrap it up here. We'll go take a little view off 55 on the S&P cash, Dow 30 down 586, NASDAQ off 170. And of course, this is really where you start seeing the wheat get separated from the chaff, and the stocks that everybody wants compared to the stocks that everybody is going to sell as quickly as they can, and hopefully we get that this little pullback, and it gives us that view into how many people are really willing to buy and how many people are really going to sell. I see some stocks today that started to pull back rather strongly that I missed at the bottom that I wanted to buy, and we'll see exactly how those pan out in the future. But long-term buys, not short-term buys. But they're starting to pull back, and hopefully that sets up everything. My long-term holdings, even my short-term holdings, looking fairly good today. It could have been a lot worse on a pullback today. But that's kind of it. Light volume. We want to see a few more days of that. Maybe some pullbacks to some significant technical support levels, and then buy into fund buying. And I think, you get a few days of pull back, pulling back, we're going to see a lot of people jump on the short bandwagon again, not the short bus, but the short bandwagon. And then you can see this happen. And it's not uncommon, even in bearish markets, to see everybody get all bearish over a few days of a pullback and then run all the shorts out and just kind of wash, rinse, repeat until you get up to a level where the market does top out, and then you have the next significant pullback. Sell when you can, not when you have to. We will see you here Monday, same bat channel, same bat time. And see you in 30 minutes with Tom O'Brien. We'll be talking about some new forms of network security that I think we're going to highlight this week.